Hello everyone. Today I want to discuss an excellent product offered by Pacific Life. The product is Trident IUL. It is a flexible premium index universal life insurance. Okay. Um, Pacific Life is a very large insurance company. It is the top and leading, the number one insurance company in the IUL product market. Now, this product is same. This is a life insurance, okay, and definitely it will offer that benefit protection. So, if the insurer is died, and then the beneficiary will get um, um, that benefit tax free. Okay, the beneficiary doesn't need to pay any tax on that on the benefit that they got. And this product also offer index-based performance, which is it give you a index account and then credited interest based on the performance of the major stock market, and then that return will grow your cash in your um, insurance policy. Okay. They also offer a guaranteed a 0% floor or minimum, so even the market go negative 30% a year, your money will not get negative, will not go negative. It will only stay at 0%. So it doesn't grow, but it doesn't go negative. Stock market can go negative, but this guarantee you will not lose your principal. You guarantee that your principal will never go negative, and the money that the interest that you have earned or the gain that you have earned in the previous year will never go negative. Okay, so whenever market drop, it will stay. The principal plus the credit interest will stay without any negative uh, return. And the third one is financial flexibility. So it depends on the different market position, scenario, situation. The insurer can change the strategy so that they can take advantage of the, well, you can say timing the market, but you can also, and and that's for good. So for people who is good at timing the market, but this product also good for people who is not not good at timing the market, because you can pick a index and it will work for you. You don't even need to trading. You don't need to change every day, every month, or every, well, you should change every year, but you don't need to change that frequently. Okay, maybe annually you review once and then you make a change. Okay, so this is the basic of the IUL, but this what make this product so specific is it has a this is the first thing, that the first feature that I want to discuss. So it has many different index account or strategy that you can choose. You can switch back and forth. Now first one is fixed account, which is give you a fixed interest rate, that pretty much normally is lower, and they also have 1 year index account, 1 year international index account. So the cap rate for 1 year index account is 8.5%, 100% participation rate guaranteed. So if the S&P return 15% a year, and 100% participation rate means 15%, and then but the 15% is more than 8.5%, which is the cap. So the your money will only grow at 8.5%. Now in exchange, now they when they give you the cap, they also give you a floor, which is 0% guarantee for. So your money will never go below. Your money will never go negative. So that's why if you're not good at stock market, you can choose one of these index. So you basically you never lose your money, but you have the potential to gain your money with the market, right? Now, these are pretty standard, 9%, 100% participation rate, and this one 2 year, because 2 years so they give you a higher cap, 21%, but of course it's every 2 year, okay? Now high power 5 year index, 5 year, over 5 year, they give you no cap, okay? This 5 year you have no cap, and then you whatever the index gain, you times 110% for that 5 year, okay? Then they credit you that interest. Now this is the more index account, there's more more excited. So for example, this is called, they call it flex index account. 1 year high cap, the cap rate is 13%, okay? 13%. Now the participation rate is 55%. So let's say S&P returning 15% a year, so you're getting 55% of that 15%. Now if that is above the 13%, the cap rate, then you cap at 30%. So this give you a high cap rate. So that's what they call a high cap, okay? Now no cap now, that no cap growth and then 100% participation rate. However, because it's no cap, imagine that, right? If the S&P gain 30% a year, right, your account grow 30%. There's no cap and 100% participation rate, right? You're basically the same as the stock market, but without loss. So of course, there will be a fee come with it, because this gives you a very high potential of growing your money. So they are giving, but that's why they need to charge you a 8.5% rate, okay? But you get a potential of earning your money and even faster than the S&P, because S&P can get negative. This is never lose your money. Now the next excited, even more excited index account is this two, 1 year plus. This is what they call the plus index account. So 1 year plus account, okay? The most important thing is for this account is 1.5, the segment adjustment factor. So let's see. So for this one, cap rate 5%, current cap rate 5%, okay? 100% participation rate, no big deal, okay? Now 0%, same. However, they add in a 1.5 current adjustment factor. Now that's 1.5x of the return. Now let's say S&P return 15% a year. This index cap is 5%, so you cap at 5%, so you don't get 15%, you only get 5%. However, they multiply the 5%, whatever the return that you get, multiply that by 1.5x. So that's why you see it's a 7.5%. Now this is the money that will grow. That is the interest that they will pay, put in your cash account, in your life insurance policy. Okay. Now next one, 1 year high cap plus. Now what does it do? It gives you a 15% high cap. So they give you a very high cap, 15% cap. Now this is an important 15% guarantee minimum. That means they will not be able to get it lower. So whatever, they can go higher, but they can go lower. That means you lock in a high cap rate if you choose this one. So they will never go below 15%, but they can go higher, maybe 16, 17, but they will not go below 15. So you already locked in the 15%, really good. And then 100% guarantee rate, 0% floor, and 1.15 factor. So whatever you gain, so let's say S&P return 30%, so your cap rate is 15%, so you cap at 15%, but then they multiply 1.15, so that's why you get 17.25%. So these are very important, very attractive, because especially the 15% cap rate and guarantee 15%. Now this is the cap, and another, let me see, I think they have this is just basically a quick comparison. So for example, let's say the market, the S&P return 30% a year. Let's say your high cap plus account, you will put all your money in the high cap plus account, so that is you will go 15%, right? You will grow because 30%, right? And 100% growth rate, not exceed 15% cap, so that give you your cat app 15%, right? And then you times 1.15, that 15% times 1.15, and then minus 3% annual charge. So that's why your return will get 14.25. Now if you choose high cap flex, so the cap percentage rate is 55%, and you cannot exceed the 30% cap, so and no less than 4, so and then they don't have a fee for that, so that's why you get all 13%, okay? Because 30% S&P, 55% of the 30% is higher than 13%, the cap, so they just give you the cap 13%. There's no cap. Basically whatever growth from the S&P 30%, they minus 8.5%, which is the charge, okay? And then you get the rest. So that's why you see 30% minus 8.5%, you get 21.5. So this is the performance that you can get by switching between this index account, based on the performance of the market. Now another important feature that comes with this policy is the guaranteed cash surrender value. So this is similar to this is called similar to return of premium guarantee rider. So basically this is optional, okay? You need to choose when you get a policy. So return of premium guarantee a cash surrender value of up to 85% of premium paid for up to the first 10 years if the policy is surrender. Now that means the premium that you pay into this policy within the first 10 years, right, you can get 85% back even from first year. So they're basically, that is, when you get the policy, you say, okay, I want to put in money, and then now if you have some family situation change, you need to get the cash back, or you need to raise cash, then you can, from the policy, you can get back 85% of the premium that you pay. Premium, okay, not the cash value. Premium, whatever you pay in, you can get 85% back. So that is giving you a very big flexibility, very good flexibility. Now this rider is available only for age up to 68, okay, and the policy has to be 250,000 minimum face amount in order to be qualified to choose this guaranteed cash surrender value or the limited return of premium guarantee rider. All right, that's for today. If you have more if you need more information, contact our email us at to our licensed insurance agent will help you out. The email address is at the bottom of this video, and you please subscribe to us, and because we are going to have more we update the latest product and the latest life insurance product, and also the annuity product, and also we will discuss some of the strategy how you do your market market protection, kid education fund, estate planning, all sorts of that. And stay tuned, subscribe us, and email us if you have more questions. Bye.